and welcome everyone to our session today, which is on the topic of the 2025 FBT update. This event is brought to you live by Tax Nuggets Academy. Thank you so much for joining us. My name is Joyce and I'll be your host for today. So enough from me. I will introduce you to our instructor today, which is the founder of FBT Salary Packaging Solutions. And he lives and breathes FBT salary packaging and employment taxes. Please put your emoji hands together to give a very warm welcome to the godfather of FBT, Paul Mather.
Hi, Joyce. Hi, everybody. I'm looking forward to this today's update session.
Me too. Very good. I have a love-hate relationship with FBT, but you should be happy to know that Tax Nuggets is registered for GST. That's one of the biggest thing that Paul recommends, and I'm sure we'll hear about that a lot more today as well.
You did say registered for GST. I think you meant...
Sorry, FBT. Did I say GST? Sorry, my mind has been on GST issues lately.
It's good to hear your turnover is above, is it 75,000?
Good to know, huh?
You let that one out of the bag. All right. So look, today I wanted to go through in terms of an update. I guess, this could be a bit of a kickoff time for people in terms of getting their head into FBT. Look at some of the latest changes. There isn't really a lot of changes, but there's a lot going on in FBT. It's been in the media a lot, especially last year. So I just want to recap on a few of those things because the things that have been out in the media, a few scandals, a few controversies, they really bring us back to the fundamentals of FBT. So I think it's good to look at them from a case study perspective. One of the things today is about, some oversights, omissions, and I guess some outrageous positions. Now, just briefly on these, employee credit card payments, paying off employee credit cards, that's often an oversight from the perspective where the employee isn't putting in a detailed expense claim. So it's just the card that's being paid off, and that is a benefit. But we need to, or the employer needs to ensure before actually really paying those credit cards, or those credit card balances, that there's actually itemized analysis and an expense claim relating to that. We're seeing all sorts of weird arrangements around salary packaging. And we want to talk specifically today about some salary packaging arrangements in relation to not-for-profits and charities. And it's a lot of confusion in that area. Really probably one of the big topics for today, and it's touching on some of what we talked about in the FBT Audits webinar last month, is that the ATO is really in a battle at the moment for FBT revenue. But it's a battle that, that they seem to be losing, or were losing last year, but they're fighting back. And we want to talk about how they're fighting back. And then sort of rolling off that topic, we want to talk about motor vehicles and how, business vehicles and the private use that businesses are providing or making available to employees is effectively driving those businesses into an FBT black hole. And so we want to delve into that into a bit more detail in terms of, how you can manage these issues in your own businesses or within your own practices with your clients. So our changes for 2025. So we've got the end date coming up, approaching quickly in terms of the exemption for the plug-in hybrid electric vehicles. We've got some changes to the ATO approved format of employee declarations. 1 April 2024 last year was the commencement of the reduction in record keeping requirements. There's sort of some good and bad there, which I'll talk a little bit more about shortly. But then, as I said, the ATO are getting tougher on FBT, but not just FBT from a liability perspective for the employer, but also in terms of income statement reporting of employee benefits. And not just current reporting, but also going back in time as well, which leads to a really ugly situation. The ATO have said that they're going to expand their focus around FBT to larger employers and to a broader range of benefits. And so we'll talk more about that later. So the plug-in hybrids, the exemption ends on the 1st of April 2025, unless there's a financially binding commitment in place prior to that date. So I guess it's an interesting one here. We've got Senator David Pocock and the Greens to thank for this, I guess, because of the fact that they lobbied. Well, originally they lobbied to effectively not apply an exemption at all to plug-in hybrids, but then a compromise was reached. But 1 April 2025, it's come around really quickly. So you need to be aware of this for your clients if they have plug-in hybrids in their business currently and they're claiming exemption. That's all coming to an end unless there's a binding financial commitment in place and the exemption already applies. Just a little bit of tinkering here on the changes to employee declarations. The make and model of the car is no longer required when employee direct declarations are completed for these various concessions here. So the ATO have actually changed their template or approved format declarations on their website to remove that requirement for the make and model of the car. So the reduction in record keeping requirements. So this was something that was put forward as an improvement a number of years ago, and then after much sort of, I guess, deliberation and looking at how there could be or what areas there could be reductions in record keeping, it effectively came down to employee declarations and travel diaries. And so the requirement for travel diaries and employee declarations in relation to all these specific areas here was waived or can be waived from the 1st of April 2024. I mean, effectively, you still need the same information within your records that is required on the declarations. But certainly for some employers, I think if we look at the living away from home, the waiving of the declarations there, if you have a lot of employees on living away from home arrangements, there can certainly be advantages in collecting that relevant declaration type information up front, which you probably should be anyway. You should have that amongst your records.
What's the travel diary alternative record keeping option?
Yes, so there it's like, if someone's going overseas for a period of time on business, then there might be, itinerary that's been set up for them. Could be calendar entries, emails about meeting times, those sorts of things. Because really the travel diary, it's like a logbook of your travel, and so that can come from your airline itinerary, hotel bookings.
Understand. So it doesn't have to be a strict travel diary per se. You can collect the information from various places.
Yeah, that's right.
In various different formats.
Yeah. So you can still keep a travel diary, require your employees to keep travel diaries and meet that requirement. You can still obtain the declarations from the employees. But this is part of trying to reduce the client burden, compliance burden, to say that, well, you don't need to collect these as long as you've already got the information within your existing records. It's not a biggie, really. It's a little bit of tweaking, I think. Sometimes I think it's just easier to get the declaration. So as I said, the requirement hasn't changed. I guess you could say it's the format that has. One of the things I found interesting when talking about this through various training sessions, talking to clients, talking to businesses, talking to accountants about this, is they weren't even really aware in a lot of situations that declarations were, previously necessary. So it's kind of like just talking about something and people are like, I don't even know what you're talking about. So you're telling me I need to keep records that I should have, but I haven't been keeping anyway, or so. Yeah. Yep. But it's there. I think it's, be aware of it. It probably, I guess, helps to create or raise more awareness about these things. Because not technically, but if you don't have a declaration, you can't claim a reduction in taxable value. Yeah, that's certainly true pre-1 April 2024, and it's still true now if you don't have that relevant information. And from an employer, choosing an election under 50-50 method for entertainment. If you don't, make that election, then it's not effective.
Yep. But unfortunately, the logbook requirement is still around, isn't it, for cars?
Yeah, and look, I guess when the government first announced this, I sort of that was one of the things that went to the top of my mind was, well, geez, what's going to happen here? Are we going to replace a logbook with a declaration? I think
No,
that would be welcome, but no, no.
no
But
chance.
the ATO loves scrutinizing logbooks or highlighting the absence of them too much.
Yeah. All right. So
Um,
we've got our first interactive poll. Paul and I would just like to know what's your role with FBT? We've got a few options there. Feel free to participate, scan the QR code. And also the link is in the chat if you want to click on that and join through your web browser. So what are the options, Paul?
so are you going to be hands-on preparing the FBT return? Are you going to put the FBT boots on and get stuck in? Are you going to sit back and review the return, do that sort of, high level return? Does it make sense? How does it compare to last year? Are you here today because, you're, especially for those in an accounting firm, you want to expand your FBT services. It is a big area of opportunity for accountants in practice. Or are you just here to improve your knowledge? So we've provided, I guess, 4 buckets there. Which bucket do you fit into?
Wonderful. It looks like most people will be hands-on preparing their FBT returns, including myself for Tax Nuggets Academy.
So it's good to see that there's so many people getting stuck into FBT.
Thank you for participating.
Thanks, everybody. So FBT in the media, as I said, there's been, especially over the last year or so, there's been a lot of scandals out there in the media, and a lot of those between employers and their employees, or sometimes with third employers and third parties, but where employees have been involved. And so when I see these things, and it's difficult for me to sit down and watch these things or read articles without sort of going, FBT, where's the non-cash fringe benefits? Is it in respect of employment? I know it's sad. But it brings us back to the fundamentals of FBT. When does FBT apply? Well, when there's a non-cash benefit that's been provided by an employer or a related employer or by a third party under an arrangement with the employer, and where it's provided to either an employee or an associate of the employee, and it must be provided in respect of employment. But also we've got these definitions of employer and employee that are very broad because they include past, present, and future, employers and employees. So that puts a very big net, around FBT, or it's a very broad net around FBT. And it's always important, whatever situation you're looking at within your business or with your client, to come back to these fundamentals, to come back to this core provision in the law, to really get the understanding of, do we think we might have an FBT issue? Then if you think you do, then from there, that's when you then go into more of the detail about, well, can we apply the otherwise deductible rule? Can we claim an exemption? Is there a concession? Can we make some sort of election? We look at all those things, but this is our pure starting point. Now, this guy here, Richard White, I mean, he's worth more than the FBT revenue that the government collects. But and I just saw he's in the news again. A couple of other articles have popped up around some of his seems like past behaviour, or I think he said, "I know people are just trying to take advantage of me." But this particular one here that was reported in the media, he had a relationship with an employee, and he gave the employee a $7 million mention.
Sweet.
It's a nice non-cash benefit, but the question is it a non-cash benefit in the sense of FBT? So he said that what did he say? But he said he had not told the board about the 2023 house transfer, so it's fairly recent, claiming he was not required to do it because it was a personal matter unrelated to WiseTech. Now I read that and I go, he's had a tax lawyer advise him on the FBT consequences of this, because he's effectively saying it's not in respect of employment. Is it, isn't it? I mean, it's the sort of thing that we can argue and talk about. We don't, there's obviously a lot more facts and things behind this, but, one argument could be that it is a taxable fringe benefit and that there's FBT needs to be applied to that $7 million mention. And, obviously the ATO see all these things, and I'm sure they're across these things. Qantas, there was some media coverage last year, I think, in respect of Alan Joyce and, with the ongoing provision of flights. So I think, as you may know or probably know, with the airlines, they often provide discounted or free flights to employees, and there's certain concessions in the law to help with that, or to help alleviate the FBT burden, I guess you could say. But certainly when the articles that I was reading was in terms of the ongoing provision of flights to former executives of Qantas. And so these are still subject to FBT, and the reportable fringe benefit requirements still apply. So we're still having to, pay the FBT, or the employers are, or Qantas is in this situation, and they're having to report benefits onto the employee income statement, even though I guess you could say they're no longer on the payroll. And that also includes relatives' benefits as well. They need to be included on the former employees.
Great example of how the core provisions of the FBT rules work in relation to, former employees. Yeah,
that's right. And so, think about this in terms of, your own business or your clients. Is there say, past employees? Is there the ongoing provision to those employees? Or has there been an incentive up front in some way to entice an employee to come and work for you? So, FBT, it's all around us all the time. The Chairman's Lounge was an interesting one as well. So there's an exemption in the law, Section 58Y, which is described as the entitlement to use an airline lounge membership. But I guess I looked at this and went, well, is access to the Qantas Lounge an entitlement to use an airline lounge membership? Because the exemption only applies to expense payment or property fringe benefit. So access to the Chairman's Lounge, is that an expense payment or a property benefit? Well, probably not. So is it some sort of residual benefit? And so therefore, if an employee is attending by virtue of their status of employment or with an organisation, or is it in respect of employment in some way, well, there's probably some FBT consequences there. And look, personally, I don't know anybody who has a membership of the Chairman's Lounge, and maybe they are including a benefit in their FBT returns. Maybe they've valued it in some way. Who knows? But, once again, as I say, I see these things and I go, is there FBT consequences on this? So there's been a lot of company scandals, I guess, just in terms of summary, especially where there's legal fees involved. Do they meet the otherwise deductible requirement, which is limited to employees? It's not limited to associates, spouses, etc. We've seen a lot of scandals with different activities where there's been meals, I think $500 tomahawk steaks I've seen, and travel, games of golf in Tasmania. There's been all sorts of other, interesting activities that have gone on. There's been short-term accommodation provided to people, long-term, in a whole range of different scenarios, and that just says to me that there's potential FBT liabilities, and also importantly, there's reportable fringe benefits requirements as well. So bringing it back, to us, my life is far less, exciting than some of these other things we're hearing about. But, thinking about your clients, thinking about things they're doing, where they're helping employees, is this creating an exposure to FBT, or might be helping an employee's family members? Here was one I saw in a current affair program, and this to me really smacks of the small business type situation. Why this was on the current affair was because there'd been theft of cash by a staff member. And there was all this video footage of seeing the staff member sort of taking the cash and pocketing it. And, they interviewed the owner of this, it's a petrol station, who said, our staff are like family. And one of the things that was mentioned to say was, and this wasn't something that was stolen, was to say each week the staff are given $50 worth of fuel. So $50 worth of fuel per week. We say by 52 weeks, that's $2,600 in benefit value per week. So we've got some in-house the in-house discount, the in-house reduction that we can apply. But if it was $50 per week at 52 weeks, you're left with a taxable fringe benefit of $950. And so my question there is this particular employer, are they registered for FBT? Are they lodging FBT returns? And are they taking this into account as a fringe benefit? So think about this in the context of your clients as well, especially smaller business clients where staff are like family. You help them out, you give them perks here and there. Is there an exposure here?
So keep your ears and eyes open for all these situations.
You need eyes in the back of your head too. And look, we couldn't finish up with sort of talking about what's been going on in the media without Peter Dutton's proposal to bring in this big, this big chunk of party expenses for business. But obviously this has FBT implications, or the idea being that if you're a small business with a turnover of less than $10 million, then you've effectively got a $20,000 free kick in terms of deducting meal and entertainment expenses, which ordinarily would probably be subject to FBT. And then it's a question of to what extent would be deductible. But, once again, FBT is up in the lights. I guess what it's raised for me, and there's been a lot of posts on LinkedIn, someone sort of commented on or added, I think I put one up myself, but is, people are saying things like, well, no one pays FBT on these meals anyway. They're all business meetings, etc. Again, I guess it's bringing the topic out into the light to say, well, there's very little in the way of food or drink that actually isn't subject to the FBT rules or the deductibility rules or non-deductibility rules, I should say, around entertainment.
My question is, how will we exclude alcohol? Like, what's the compliance burden there to work out which meal entertainment has include alcohol and exclude alcohol,
Is there any alcohol in there?
I know. So
you wouldn't know.
Who's the FBT governance elf that's going to be doing this? Like, poor them.
Well, my suggestion was, like, if you're a steak restaurant, well, suddenly your steaks are $500, but your fine bottles of red wine are $5, then the beers are $1, maybe $2 for the imported beers.
What about Parma and Pot for $20 every Wednesday? Oh, then you got to start apportioning things. Then it gets really complicated, right? Like, I just find this so ridiculous. So yeah, but we don't know yet how the law will be administered here. Is that right, Paul?
Oh, look, no, and obviously there needs to be change in government, and right, and there'll be all sorts of. I guess one of my comments too was the fact that a lot of these small businesses are not registered for FBT anyway, so they're not even thinking about FBT. And if they brought this in, and if a business wanted to take advantage of this, would a requirement be to actually be registered for FBT, which is often the case with a lot of things. Unless you're registered or you need to register for something, you can't actually access it. Anyway,
watch the space.
Yeah, that's right. So common oversights and missteps can lead to non-compliance. So, how does this happen? Well, I guess there's two ways I sort of think about it. Either you're not registered for FBT, and in which case you're in the majority of employers, which means if you're not registered, then you're not really thinking about FBT, or it's maybe not keeping you awake at night. If you're registered for FBT, often these oversights come through because of a lack of knowledge. It could be a lack of processes, a lack of policy, and a lack of procedures. Now, I know that all sort of sounds like, okay, process, policy, procedures, but if you don't have those things, then you're not actually making or in a position to make any real assessment, of a non-cash fringe benefit of some time. I guess to give some context here as well, I often see, and it's usually through referrals from accounting firms, either working directly with the accounting firms or talking with their clients, all sorts of, creative arrangements that are put in place, often dictated by, a senior employee or the owner of the business. There was one where a CEO of an organization had purchased a motor vehicle in his own name and had financing on that motor vehicle, and then requested, I think it was a $40,000 reimbursement to effectively bring the loan down. And he said, I want to salary sacrifice that because it's my, it's my company car, even though it was in his own personal name. And so the company went ahead and did that. And they weren't aware of what the FBT implications were. The FBT implications were that 40,000 was subject to FBT. Yes, the employee reduced their salary by 40,000, but and that was the salary sacrifice, but it's still subject to FBT. The lack of policies and procedures, as I sort of mentioned earlier, that means we've sort of got no playbook to go by. I think, it's probably not a good comparison, but I think it's about like COVID. When COVID hit, it wasn't necessarily a playbook, and that could be a bit critical, but it's sort of trying to work your way through things as they're happening. Finance, HR, and payroll often not aware of the rules or the implications. And I think this is probably the big one within an organization, not just small organizations. I think particularly for not-for-profit organizations, but also larger organizations, who is responsible for FBT within the organization. Even if you're outsourcing to an accounting firm or Big Four, or you're outsourcing your salary packaging or fleet management, that doesn't mean you're letting go of your responsibility for your FBT. You still have to own that, because if that outsourcing provider or accounting firm, and including Big Four, I've seen them make plenty of mistakes. If they get it wrong, it's you, the employer, who's got to deal with that mistake. So employers have to own their own FBT policy, because ultimately they have the responsibility. So what are some of the, and if we sort of get down into a bit more detail, what are some of the common oversights and missteps? The motor vehicles talk a bit more about later. Visas. So there's an exemption under the FBT law for a visa where someone is relocating or immigrating to Australia, and that exemption is contained within the relocation transport exemption in the FBT law. So that's the only time a visa is exempt. Where an employee is extending their temporary visa whilst they're in Australia, or renewing a visa whilst they're in Australia, or applying for permanent residency, all of those types of visa expenses are subject to FBT. And not only that, on top of that, any consulting fees, agency fees, or if you're using a Big Four accounting firm around these visa applications, all of those fees are subject to FBT as well. So there's no exemption in the law for them. There's no, you can't claim otherwise deductible rule. Health insurance.
Because it's private, yeah?
Yeah, that's right. Health insurance, also subject to FBT. I think people try to argue that, well, especially for people who've come into the country on temporary visas, who don't qualify for Medicare, the Medicare system. Well, it's in their contract. It's a requirement. Once again, it doesn't matter. It's still subject to FBT. But, there's a lot of organizations I work with who, health insurance is a benefit they provide to all of their employees and their employees' families. It's all subject to FBT. It's often the big ticket item in their FBT return. Courtesy cars, specific to hotels, but it can be in other situations. So we've worked with a few hotel groups, and there's courtesy cars that are often taken home at night by an employee. If they're taken home at night by an employee, then that's deemed to be a taxable fringe benefit, because it's available for the employee's private use. Car parking is a big one that's often overlooked, either for all locations that an employer has or some locations. Businesses have to be very aware of, especially larger ones, where they're, acquiring other businesses or entities, ensuring that they've got that coverage, ensuring that they're aware of where they provide parking to their employees. I think parking has gone up. The awareness is greater now since the ATO released the new car parking ruling, and particularly because of the fact that the ATO, through their ruling, have extended the definition of commercial parking station to effectively include any type of car parking station where there's some sort of fee charged and there's advertising. And so that includes shopping centre car parks, hospital car parks, university car parks. I've dealt with lots of different situations around the whole visa issue and LAFA issues. And I find interesting is that, and this comes back to who owns FBT or who needs to have knowledge of it, is situations working with corporates where, the HR team and the tax team don't talk to each other. There was one in particular where the finance director and the HR, I think it was the HR director, had a strong dislike for each other. And so they didn't talk. And so this organization got them into a world of trouble, into millions of dollars of trouble around FBT because tax didn't know what HR was doing. And tax was preparing the FBT returns and had been overlooking all the PR applications, the health insurance, and a bunch of other benefits. I mean, look, things they probably should have been picking up anyway through having a good FBT return preparation process. But certainly, lack of policies here as well. And I see this a lot. I mean, we're talking about very large organizations. Living away from home arrangements is a big oversight because when we talk about living away from home, people often jump to, living away from home allowance. No, we don't pay any living away from home allowances. But living away from home benefits can be provided by way of an allowance, but they can also be provided by way of reimbursement or direct provision. So it doesn't matter how it's being provided, you still have to ensure that the employee meets the requirements of maintaining a home and are within the 12-month capped period as well. And so that's one area that's often overlooked. We've been working with an organisation recently who have got a lot of past entertainment, which had all been booked to their marketing ledger accounts, to business development. And these had never been considered as part of an FBT return preparation process. There were incentive trips as well. And so we're talking into the millions of dollars of expenditure here that have been overlooked. And now it's hard work, frustrating work, trying to basically go back in time and fix all of this up. But that's one thing they're committed to do. And then we're helping them in terms of putting the right processes in place going forward. So just a bit of a mishmash there, but it then brings us onto this question, who should be responsible for FBT? I'm interested in your thoughts on this. Is it the business owner? Is it the accountant, whether internal or external? Is it the tax manager, if you have an internal tax manager? Is it the payroll manager? HR, remuneration manager, or is it a shared responsibility? And not shared in terms of they're responsible, but shared responsibility as in
no one's responsible.
Yeah.
When everyone's responsible, no one's responsible, huh, Paul?
Right.
So you're just curious about what people think. No right answers here, right, Paul? Or is there a right answer?
Yes, there is a right answer.
Oh, let's have a look then.
Well,
thanks for voting.
In my experience, I think there's a right.
Oh, it looks like almost 70% has said it's a shared responsibility.
And that's right. Look, it is a shared responsibility. I think when I started my practice, one of the first clients I worked with, we had like an FBT workshop. We had HR there, payroll, we had the REM manager, tax, finance, and we're all in the room together. And we were discussing certain FBT issues. We'd done a review and we'd found a whole lot of pretty significant issues. And so we started running through these issues and discussing them. And it seriously was that kind of, so who's sort of responsible for this area and the tax.
But I think ultimately, if you were to, the buck really stops at the public officer that is signing the return. They are responsible to make sure they've got all the right data flowing into the return, whoever that public officer is, I think, because they're signing on it.
You're saying that reminds me of one of the clients I worked with. I think they had 20 odd returns, pretty large returns, very big organization. And I remember we booked in a time with the public officer to effectively sign off on the returns. And we're in this meeting room and the public officer, pretty stressful time. You're running up hard against the deadline, etc. And the public officer picks up the pens about to sign the employee declarations and just looks up at me and says, "Can I sign these?"
Oh, passing on the responsibility, huh? Hmm.
So as long as you think it's true and correct, of course you can.
Good answer, Paul. All right, moving along.
No one person, should be responsible. It is a shared responsibility, but you have that responsibility shared through your policies and your processes and procedures. You keep it tight. All good in theory, but it's important. So charities, not-for-profits. So this is an area it's quite confusing. I don't think we have a poll question on this, but interesting to see out of those attending today who are either from charities or not-for-profits or who assist or advise charities or not-for-profits. So, a lot of employers think that, they're a charity, or no, they know they're a charity, but they think, well, look, we're exempt from FBT, we're not-for-profit, we're exempt from FBT. So they don't register for FBT, they've never been given FBT any thought. That's one sort of type, I guess, of charity or not-for-profit. And then there's others who allow their employees to salary package up to what we call the cap, which is $30,000 grossed up. Ungrossed up for type 2 benefits, it's $15,900 worth of benefits per employee per FBT year. So they're tax-free. And so we're talking here about the sort of the traditional, packaging the mortgage or the rent, or it might be packaging your personal credit card bills. But we've seen situations, as I said, where employers have treated themselves as exempt, but they're actually not an FBT exempt, but they are rebatable. But there's a big difference from both an FBT and a salary packaging perspective between being exempt and being rebatable. And I've got some calculations later which will sort of support these numbers. But briefly here, the impact on an employee on a 50K salary, the difference is $3,462 in the hand. For an employee on a 75K salary, the difference is just over $5,000 in the hand. But as I said, I'll illustrate this later. And where we've come up with these issues, and one of them was involving a client of a big 4 firm, which doesn't hold them in very good light. But this is real, I call it child's play. Even a child could identify this issue. And what I mean by that is we take an example here. One of the ways we go and check, we can publicly check what an organization's FBT status is. So here I've typed into the ABR website, RSPCA, and we've come up with RSPCA Australia. And as I said, it's child's play. We put the crayon, or we'll draw the crayon or the marker pen around RSPCA Australia. And then we click into RSPCA Australia, and we see they've got a charity tax concession. They're a charity endorsed, and they're endorsed with FBT rebate, which we've circled. Not FBT exemption, FBT rebate. So that's just an example that I'm just using to illustrate. Then if we go back onto the ABR website, and this time we type in Red Cross. So it came out with 98 matches. There were 3 there's quite a few with Red Cross in the name. We can see those 3 that I've circled. They will have the same ABN. So it's one ABN. They've got different business names, as a lot of businesses do, have multiple business names. And then when we click into, I think, the Australian Red Cross Society, we can see that they're registered as a charity. They have charity concession status. And then right down the bottom there, under tax concessions, they are FBT exempt. So they have the FBT exemption. So they get the $15,900, or their employees do, tax-free per FBT year, plus the meal entertainment concession as well. And so, as I said, I wanted to just illustrate this with looking at numbers. And so here we've got a situation where we're saying we've got $15,900 in mortgage repayments for a year. We've got 4 scenarios. So scenario 1, which is the first column with the blue shade in it, we've got the employees on a salary of $50,000. The employer takes out the tax. The employee receives $43,576. And then the employee pays their mortgage. And so they're left with, after mortgage, $27,676. So that's scenario 1. Scenario 2 is the this individual works for a taxable employer. So they might work for a small business or a large corporate, but they don't have any FBT concessions. And the employer, let's say in this scenario, this isn't going to happen in the real world, but let's say they allow the employee to package their mortgage of $15,900, but that will attract an FBT liability of just over $14,100. And so the employee is not going to be in a very good position financially through that packaging arrangement, because it's going to end up with effectively net take-home pay of less than $20,000. So, they're worse off through this arrangement than not packaging it. Everybody goes, oh, packaging's great. But, it depends on the situation and the benefit and the FBT implications and the salary level. Mm-hmm. Scenario 3, it's a rebatable employer. So this is like RSPCA. So here the employee sacrifices the mortgage, and then they also sacrifice the FBT liability, which you can see is a lot less because it's a rebatable employer. It's about half of the normal FBT. And so the employee then has just over $25,000 left in the hand. So they're still worse off though than if they didn't package at all. And then scenario 4, which is really the nicest position to be in, is if you work for an employer who was exempt, then you sacrifice the $15,900, but there is no FBT charge.
Mm-hmm. This is the Red Cross.
Yeah, this is the Red Cross such scenario. And so you end up with 31,000 odd, which is, my screen's actually cut off a bit there, but
it's a positive cash flow of $3,500.
Yeah.
Which is great.
And this, I think this is good just to look at the differences, but keep this in mind with organizations who have been treating themselves as FBT exempt when they're actually rebatable. When they've been found out, then effectively overnight, or pretty close to overnight, they need to roll back that packaging. They can no longer provide it. So an employee going from on a $50,000 salary, receiving $31,238 in the hand, suddenly goes to receiving $27,676. Big impact, on the employee. And then if you're an employee, what would you want? You would say, well, I want a salary increase. You got this wrong. I didn't get this wrong. You need to increase my salary. And that's what we see some employers having to do. This happens more often than it should really.
Mm-hmm.
Same again, exactly the same in calculations. We've got a $75,000 salary just to show that, the salary levels do have an impact on this. But it's a very similar, as you can see, very similar trend. Mm-hmm. And so at the end of the day, when an employer finds out that they've been treating their benefits as FBT exempt, in actual fact they weren't, then suddenly the employee is in a much worse off position. So do you think there's confusion around the FBT and salary packaging rules for charities and not-for-profits? Yes, confusion mainly with FBT, or yes, confusion with FBT and salary packaging, or no, it's all child's play.
Let us know what you think, people. It is quite a specialized area, but there are huge consequences of getting it wrong. And there are quite a few not-for-profits, like sporting clubs and all that. So it does come up quite often, doesn't it?
Tens of thousands of not-for-profit organizations.
And sporting clubs are not exempt, right? Would they have a rebate?
Yes, some would have a rebate.
Yeah, so it is really tricky. All right, there we go. 85% said there is confusion in both FBT and salary packaging, which is not surprising.
Yeah, and look, I think one of the big challenges here is for a lot of not-for-profits. I do a lot of in-house training with not-for-profits,
mm-hmm.
And it's really trying to get them to a base level of knowledge. They don't have policies, they don't have the processes in place, and that's because not-for-profit organizations generally they don't have a tax accountant or a tax manager, because they don't have a lot of taxes to manage. Mm-hmm. It's generally
income tax exempt.
Yeah, it's just GST. And so, they don't have that tax knowledge in-house. And so this is where it all kind of breaks down. Because when we step back and look at the FBT rules, Someone messaged me the other day and said, "Oh, look, do you do FBT training for rebatable employers? Because we want that specialized training." And I wrote back and said, "Well, our training incorporates rebatables. And the reality is 95% of the rules in the FBT law apply to all employers.
Mm-hmm.
There's just little differences around the edges, I think. And then people, often when I do run a training session for not-for-profits, the questions aren't about the packaging or the caps or anything. The questions are the basic questions around things on entertainment or cars, that type of thing. But thank you for participating in all of these polls. It's good to get that insight. And look, I'll be honest, the answers are pretty much, I think, as expected.
Mm-hmm. Right.
So the
ATO, 10 minutes left, Paul.
Minutes left. Good. The ATO's renewed focus on FBT enforcement sounds quite strong, doesn't it? But as we mentioned in the audits webinar, the ATO has identified or estimated a growing FBT gap. It started at 1 billion, then it went to 1.3. It's up to now 1.9. So it's gone north of 2 now, probably. But it's about 35%, which is as a percentage revenue gap, it stands out on its own. It's world class, I guess you could say.
The world class revenue gap.
But not in a good way. So the ATO have only received about 65% of the total expected amount of FBT. And so, that incentivizes them. There's probably a nice way to put it, to effectively, roll out more of the troops around this, more data matching, more audits, more reviews, as well as more education, providing more education. Their website in terms of FBT content, I think it's probably fair to say, is blowing up compared to where it was a few years ago. There's a lot more on there, things about what warrants their attention, etc. The other big gap is in terms of, there's about 900,000 employing entities, employing 14.5 million employees, but only about 10% are registered for FBT. So that's a huge gap in itself. Many are not required to be registered for FBT, but many are. And when you've got a gap of 800,000 or so, that's significant numbers. Now, we have to remember that FBT is more than just motor vehicles and entertainment, because often when I'm talking to accountants, particularly, they sort of focus on the motor vehicles. They say, "Oh, the entertainment, it's all exempt," or it's, there's not really a lot of it. But then they overlook that there's all these other categories as well. And some of the things I talked about earlier, like, visas, health insurance, the car parking, a lot of oversights there. And as I said, there's rules for different employers. I think I said 95% before. I was saying, but I've got on the slide here about at least 90% of the rules apply to all employers. The checklist here, it's a good checklist, I think, just to go through and see how would your clients go with completing that? How would you go with completing that in your own business? Is there anything that you're overlooking? Or is there anything in terms of the question, the type of benefit that you don't actually understand? It's important that we actually understand what we're dealing with. The FBT risks associated with business vehicles. Now, look, just briefly on this, utes are beaut, aren't they? Because there's no FBT on utes. Or is there? The FBT law was introduced in 1986. When it was introduced, the ATO at that time, the government introduced the law. The ATO then released all of these miscellaneous tax rulings, MT 24, 26, 27, 33, 34. And these are all still current rulings, even though they're quite old. All still current rulings in 1986. So that, FBT is about 40 years old. But, for a long period of time, up until about 2016, the ATO, some of you will recall this, the ATO used to provide lists of vehicles on their website, and they would effectively, with those vehicles, they would list them by year of manufacture and by manufacturer. So there was Ford, Holden, Toyota, et cetera, et cetera. I mean, I remember looking at those lists and going, I can't believe there's so many different variations of a Toyota Hilux. But they were. But the ATO would categorize the vehicles, each vehicle, by whether it was a car or a non-car. Or what they did is they put Section 8.2 or Section 47.6, 8.2 for cars, 47.6 for non-cars. The problem with those lists and the content related to those lists, it didn't really make it clear about how to assess if there's FBT or not. All it was saying was that if you have this vehicle, this Toyota Hilux 4x4, two-door, blah, 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 might say 8.2, and you go, well, it's exempt from FBT as a car, or Toyota Hilux, blah, 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 Section 47.6, it's exempt as a non-car. We don't really care whether it's exempt as a car or non-car, it's exempt. But the big point that was being missed here is that those lists were about what vehicles are eligible for exemption. Then the second test, and really the most important test, was whether there's limited private use or pretty much no private use. So that was overlooked. And so that's where this kind of utes a butte thing is just, it's evolved over time.
Yep.
In 2018, the ATO released PCG 2018-3, which effectively provides guidance on when you can claim exemption. It contains a set of rules when you can claim exemption on your cars and non-cars. It applies equally to both, but it's got a whole lot of requirements in there, part of which is distance related. But the point here is why we need to dispel this FBT exempt notion on utes, is because there's this 32-year gap between when the law was introduced and when the PCG came out. Between that time, there wasn't really a lot of noise from the tax office around utes. But the law is clear. Unless you've got limited private use and very narrowly limited, you can't claim exemption under the law. Or unless you meet the requirements of the PCG, you can't claim exemption under the PCG. You can only claim it under one or the other. And I blame the ATO here. They've been asleep at the wheel on this one for so long. Accountants have been asleep at the wheel and employers have been asleep at the wheel as well. Around that time, or after that release of the PCG, that's when the ATO started to sort of ramp up their education, and then they moved into compliance and audits and data matching. And their biggest areas of concern, where they see significant levels of compliance, relate to, employers treating cars 100% business use, even though they're used available for private use. Situations where employers don't have a valid logbook, or the logbook is not a representative sample of actual travel. I think it's more the former, just not having a valid logbook, in my experience. And then treating all eligible commercial vehicles as exempt, without considering if the private use of the vehicle is limited. So that's what I was going on about before in the previous slide. Treating all your utes, single cab, dual cab utes, your vans as FBT exempt, saying, well, they're business vehicles, they're workhorse vehicles, therefore they're exempt. But unfortunately, the FBT law doesn't recognize that and doesn't work in that way. So what are the risks? The risks are where the employer, the business, owns or leases vehicles in a business name, or it could be salary packaging arrangements, could be a novated lease or an associate lease, or where the employer or business provides private use of a motor vehicle in some other way. What are the types of motor vehicle fringe benefits? Well, there's only two types. There's cars and non-cars. And then what are the options? In terms of the FBT options, how do we determine how much FBT we have to pay? Well, there's stat formula method, but that only applies to cars. Operating cost method, or otherwise known as logbook method, which requires a valid logbook, can apply to cars, but also non-cars. Cents per kilometre basis applies to non-cars only. And then in terms of its exemption, but as I said, it's very tough to get exemption, but that if you can get an exemption, also means the eligibility for exemption applies to both cars and non-cars. But you need to either work through the provisions in the law or through the requirements in the PCG to claim exemption. This is just an example here of a recent employer obligations review. So as I said, the ATO are doing, data matching, FBT audits, but they also do employer obligations review, which extends past FBT into things like pay-as-you-go, payroll, super, and sometimes contractors. I just wanted to share this example here with you because it illustrates the way that the ATO is moving around the FBT side of things and compliance and audits. Here we've got a business that started in 2001, never been registered for FBT. And since day one, they've provided motor vehicles to their employees. And they swear black and blue that they're business vehicles. If the employee wasn't working there, wasn't employed there, they wouldn't be provided with the vehicle, as if that's some sort of, justification. But, when you're caught out in an audit or a review, especially particularly for business owners, these things come as a real shock. You sort of, well, I didn't know about this. No one made me aware, or I've just been busy growing my business. And so the tax office here have effectively said we want you to lodge FBT returns for the 2021 and 2022 FBT years, because the ATO's records through data matching of the registry services in each state and territory, this particular business is located in Queensland, the tax office said that their records show that you have one or more registered motor vehicles. And I think when this was referred to me by an accounting firm to sort of discuss and advise on, they said, well, which vehicles? And I said, well, I would assume they know all the vehicles that are registered in the business name, not just sort of, one or two vehicles. They would know all of them. And to the right there, I've got the list of vehicles. There's a bunch of Toyota RAV4s, there's a Camry, a couple of Nissan X-Trails, there's a few BMWs, there's a Mercedes, and it wouldn't be a successful business without a Ferrari in there as well. But what we're saying here, if we put a dollar amount next to each of these vehicles in terms of what they cost, and then multiply that by 20%, it's going to give us a pretty rough idea of the FBT liability. But see, this audit was last year. It was sort of in the first half of last year, but the tax office have been clever because they've said, we want you to lodge FBT returns for 2021 and 2022. Once those returns are lodged, that organisation is then registered for FBT. That organisation then has two FBT returns outstanding that are late, meaning the 2023 and 2024 returns. But not only that, and this is where it impacts on the employees, and I talk about this black hole for FBT, is that they're also requiring the employer to submit update events through STP in relation to the reportable fringe benefits that relate, to the private use for these employees, which it'll be 20% stat fraction for all these vehicles. There's no logbooks, even though the business owner is saying all the vehicles are 100% business. There's no logbooks to support 100% business use, or even 80 or 90% business use. And so, this is a really obviously a huge creates a huge amount of stress for this particular employer. So do you want to do this last quiz?
Sure. Lucky last quiz. Let us know what you think. Is it difficult to understand and apply the FBT rules on motor vehicles is it because clients don't want to talk about it? Or all you hear from clients is 100% business use, or our clients' FBT compliance has been overlooked for so long, just burying the head in the sand, I guess? Or clients don't want to incur fees on FBT services, or all of the above. Let us know what you think, people. Last quiz of the day. And I think we are at time as well. So we might quickly have a look at the answer. Yes, as expected, all of the above. 75% people have said that. It is a tough one, huh, Paul?
It is. And as I say, it's not just about the rules. It is more about this engagement and getting people to listen, And then once we do that, sure, we've got to try to explain the rules or explain the impact. But as I said, the ATO are getting cleverer what they're doing. I've been involved in another, it was an specific FBT audit where there were, I think, 4 luxury vehicles. Another Ferrari appeared there. And there once again, they took that approach. They wanted returns lodged for 2021, 2022. And then by then, basically meaning there's additional returns overdue, but then also wanting those update events through STP. So this affects your employees, but not just employees, they might be former employees as well. Where you have to write to them and say, look, last time we advised you your reportable was 0. We now are advising you that it's $20,000 or it's $30,000. Best go and talk to your accountant about this.
Which is extremely annoying.
Yes.
All right, lots of Q&A, Paul. Have you got maybe 10 minutes to stick around?
I certainly have.
Thank you. Lots of questions about cars, but I might just jump into your favorite one from George. Do you think every business should be lodging FBT returns even where there are no known fringe benefits? Example, a nil return. And also similar question is, what if there's only, say, EVs, electric vehicles, as the only fringe benefit?
Yeah, look, I mean, if you've heard me talk before, George, I always say that if you employ people, you should be registered for FBT. Not just that, lodging nil returns, which protects you against the audit time limits, but also, to ensure you're thinking about FBT. I mean, today is kind of the dark side of FBT, I suppose, but there is also a light side to FBT. There are a lot of opportunities and things to think about, to take advantage of, and also through salary packaging. And so, I think if you're in practice, George, or others in practice, get your clients registered. It might come with some pain and pushback, but then try to sell those lighter sides to it, or the sunnier sides to FBT and to salary packaging as well, because you build that service line of products and services in this area, and there's more revenue for you, but at the same time, you're also protecting your clients.
Absolutely. Next question is also around EVs. And so just to get back to that question, so if the only fringe benefit is EVs and they're all exempt, should you still need to lodge a return or just a nil return?
Look, yeah, and so, sorry, I sort of didn't really answer that question, but yeah, in terms of if you've done a review, you're satisfied that there's no taxable fringe benefits, well, you don't have to be registered for FBT. You don't have to lodge a return, or you could be registered and you just lodge a notice of non-lodgement, or you lodge a nil return.
Understand. Annie has asked a question about this EVs, right? Is it right that, first of all, even though EVs are exempt from FBT, they are still reportable? And then if the reportable or the benefit provided is more than 2,000, then you still kind of need to prepare the FBT return, but it's a nil return, like nil FBT.
Yes, you're on the money, Annie, unfortunately. Yes, you still have to do your calculation like you're doing an FBT return. And then, sorry, something I thank you for asking that question, because yes, you still have to report if it's over $2,000, which is probably going to be the case with most EVs, plus any other benefits that are being provided. But the other thing, one thing I didn't highlight was about, record keeping is huge with FBT. And you need to keep records whether you're registered or not registered for FBT. So it's just something to sort of add to George's question, but also to Annie's question as well.
All right. We've got a couple of questions about car dealerships. Cars are very popular, Paul. Bianca has asked, so is it a given that a car dealership should always be registered for FBT because the employees are more than likely driving a car home, i.e. risk of not being registered being picked up by the ATO?
Yeah, look, that's right. It sort of comes back to what I said earlier. Well, I think if you employ people, you should be registered for FBT.
Yeah. And then George just followed that up with car dealerships where employees use, for demos, or where employees use the motor vehicles on the lot that are for sale. Should these be subject to FBT?
Yes. And look, that they are. There's special rules that apply.
Okay.
In terms of where you're a car dealership, I can't off the top of my head remember the ruling number. But yeah, there are special rules that apply. I would have thought too, car dealerships probably get a bit into entertainment and promotion and other things as well. I wouldn't be surprised. So and now look, I've dealt with a few car manufacturers, and yeah, well, more the manufacturers maybe. I know some dealerships, and yeah, they seem to have a fairly good ability to spend money around entertainment. So
Yep.
yeah, but yes, it's just yes, yes, yes.
They're just checking in with the expert. This one is a bit of an interesting one from Sue. Am I right in saying that directors are deemed employees for FBT purposes? Back to basics.
Yeah, look, I guess they generally are, but it comes back to the facts. There was a case recently, or last year, or was it the year before, where it was held, but I think it was more a trustee. Can't remember off the top of my head, but it's looking at the circumstances in terms of where they're being provided benefits. Is it in respect of their employment? Are they employed? So it's going back to those fundamentals to determine that.
Yep. And maybe, last couple of questions from Janine. If a courtesy car at a hotel is taken home by more than one employee, will it be considered exempt as a pooled car?
No, it won't be. But it will be an excluded benefit for reportable fringe benefits. So, so that's a good thing. But there's still an FBT liability there. But it just means that on the basis that it fits the definition of a car, then there'll be no reporting on the payment summary or income statement for any of the employees who've had private use of that vehicle. If it fits in the category of a non-car, then it'll be subject to FBT, but also it will be reportable on the employee's income statements.
Yep. Amazing. And I'll just take one sort of admin type question just to change things up. Last question, and apologies, we couldn't get through all the questions today. From Grace, are the ATO planning to pre-populate RFBAs, reportable fringe benefit amounts for employees at any point in time? This is something I often see employers missing when lodging their STP finalization.
I'll be honest, Grace, I don't know the answer to that question.
Okay, yep.
Yeah, I don't know. Maybe there's someone else attending who's closer to that. I would have thought it might be something in the future, but I don't know.
All good. And final takeaway, Paul, if you could remind one thing to the audience today from today's whole session, what would that be?
Well, aside from, giving an employee a $7 million house, I think it would, what I'm seeing is a lot of pain through the audits. I've probably been involved in about a dozen or so audits over the last few years, and there's a lot of pain. So I think my takeaway thought is, especially if you're in practice, is to get close to your clients around FBT. If you already really have the visibility, that there's issues, don't let it drag on. Try to deal with it, or also to protect yourself as well. Mm-hmm. If you're in practice, for those working within organizations, hopefully there's been a few takeaways here today, and maybe things that have been overlooked, or maybe some concerns around, motor vehicles as well. Because it's across the board. I see it with large organizations right through to very small who, are not fully across the FBT rules.
Excellent. And on that wonderful note of warning, thank you so much, Paul, for joining us today. And thank you, everyone else, for tuning in as well. Please put your emoji hands together one last time to say thanks to Paul.
Thanks, Ed. Thank you,
and
everybody.
Paul, Well, we'll be back on the FBT Accelerator Program, which starts this Friday. It's once a week, every Friday throughout the month until April and May.
Best way to
Bye.
Thanks, everyone.